see time is around 7:28. Let's look into Saturdays and Sundays Bitcoin trade analysis. Since Saturday and Sundays there won't be huge volatility, and you can expect some kind of volatility on the second half of Sunday. But during the initial period, you can see there is a tight consolidation. And if you look into a daily time frames and analyze how the Bitcoin has traded, as I've already previously mentioned to you, the price clearly broke this low over here. You can see clear break of structure, which I have already explained to you if you go and watch my previous Bitcoin trade analysis. Here, there is a clear break of structure, and I've told price rejected from higher levels and closed below this 200 moving average over here, clearly signifying bearishness. And I told that the market might look for next liquidity over here. So there is high chance that the market might come all the way to this level over here. But before that, you can see there was a tight consolidation, and you can see a kind of channel pattern formation over here. But let's see, you can see price rejecting on a daily time frame from 21 moving average and closed below the 9 moving average, clearly signifying bearishness, guys. And again, you can see another consolidation with closing within the yesterday's range. And if you consider the swing low to swing high, you can see price rejecting from 0.38 level over here of yesterday previous candle. You can see rejection of price, which I've already explained to you all this, guys. And this was on Saturday, and this momentum was on the second half of Sunday, and you can expect some kind of volatility during the second half of Sunday. And what you can see here, and let's decode this trade, guys. You can see the market is trading below the 9 rejection of price from 21 moving average and close below the 9 moving average. And this is the inside candle. Failed to make a higher high, you can see clearly. If you see the market didn't grab this liquidity, but even closed below this level between this range only. You can see this is the range. And let's look into a 5-minute time frame and see in case how to decode this trade. Right? This was on Saturday and this is on Sunday. And the first thing what we do is to mark the fib levels, the mid of the first candle, guys. So let's try to mark the mid of the first candle on Saturday. So if you consider this swing low to this swing high, anyways, guys, from high to low or low to high, usually we used to mark the opening candle, but let's mark the mid of the candle and see in case if the market kind of forms some sort of support anyway. This is the mid of the first candle. And what you can see here, which have already previously mentioned to you, this swing momentum over here changed the whole perspective from being bearish to bullish, guys. You can see this swing over here. This is the chalk formation, a clear chalk formation, and which have also mentioned in previous videos that this swing over here, which changed the whole market sentiment from being bearish to bullish. And if you need, you can go and watch my previous videos, which I have also mentioned to you about this chalk formation as well. And what I told is to mark the important structure over here, the last down candle. You can see the market came and took support over here. It's not this swing, guys. It's actually this swing over here. So the last down candle was this candle. You can see clearly. Here also it formed chalk, and here also it formed chalk. But you can see here, this is the first chalk, guys, and this is the second break of structure. So you should consider this one. And you can see the market came and mitigated this order block. And after the mitigation, guys, the market failed to make a lower low here. And after that, the market clearly formed a chalk over here, showing some kind of bullish sentiment. And it's very important that you mark the zone over here, and you should try to extend it and keep it all the way here. You can see the market came here, took support from here, and try to head higher. Once this order block has been mitigated, it doesn't hold any value, and this order block also has been mitigated. So you should look for lows only, guys, once this order block and this order block has been mitigated. But let's look into Saturday's trade analysis and see in case if the market moves in our favor. And you can see a clear order block level here. But the market failed to break this high, guys. So this is the order block actually. You can see this is the clear order block. But what you need to see is this swing structure over here. And if you see, guys, the low to high of this candle, the common point between this to the common point between this, the market was not forming any support. But clearly you can see the market clearly broke the structure high, even strokes this structure high, clearly showing some sort of demand over here. But in a 5-minute time frame, let's lean and watch, guys. You can see clear break of structure over here. You can consider this to be a clear break of structure. And in case if you mark the order block level here, you can see the market came, mitigated this order block. And if you look here, guys, the market here mitigated. but failed to make a higher high, guys. You can see clearly the market here failed to make a higher high and broke this below this level. But before this trade only, you can see clearly the market after here, guys. The order block level. In case if the market sentiment would have been bullish, guys, the market here, if you consider this swing low to swing high, you can see price taking support from this level over here. This is the 50 level where the price is taking support here. So in case if the market sentiment would have been bullish, the market might taking support from this 200 moving average and again retraced back, took the support of the mid of the first candle and clearly could have broken structure and continuation of price towards the upside, guys. But what happened is that the market failed to make a higher high. Instead, the market clearly broke structure towards the downside and made a lower low. You can see clearly the market closed below this and formed a chop formation over here, clearly signifying bearishness, guys. But this is the initial move. And in case if the market might have taken support from this order block, the market would have clearly broke this high in case if the market sentiment would have been bullish. Now we need to look into two setups, guys. One setup is that the market might come mitigate this order block and you could have entered long position here and expecting the market to go towards the upside, targeting this liquidity and targeting that liquidity. This is one setup. And another setup is that you can see internal chop formation over here. And you should see in case if the market faces resistance at the 50 levels, you can see clearly if you consider this swing momentum and if you can mark the 50 levels over here, you can see the market facing rejection at 50 levels over here. And let's mark it out 50 levels. There are two possibilities, guys. Once you can see the market taking support from this zone and you could have targeted this high or this swing structure here, or in case if the market is facing resistance at 550 levels. But here you can see even after this kind of bullish sentiment, the market came, mitigated this order block and failed to make a higher high here itself, guys. Instead, the market broke structure towards the downside. And once if you might have marked the fib levels over here, the common point between this to the common point between this, you can see once if this 0.5 level has been broken towards the downside, this is the 0.5 level, guys. And once if this level has been broken towards the downside, and you can see this rejection of price from 200 moving average, the 9 moving average, as well as the 21 moving average. You can see this candle, guys. Market came all the way, rejected price. You could have easily entered short position here, guys, keeping your stop loss just above that candle itself and targeted all the way to this swing low. So you could have targeted all the way to this swing low. This is one scalp where you could have easily taken and you could have captured a 200 to 300 points, guys. So this is one trade setup where you could have taken. And what we could do is we need to mark even the day VWAP level. So let's mark the day VWAP level and see in case day VWAP level shows any sort of confluence for our trade. So the first candle, guys. And the day VWAP level here, it's showing some sort of confluence here. You can see the market after the kind of bullish sentiment, an equal size bearish candle formed an engulfing pattern, rejected price from 350 levels, and the market continued towards the downside. In case if you might have seen this VWAP level rejecting from the opening price, you can see mid of the first candle. Here it formed support and tried to break here, but now the same mid here, it's forming a resistance over here. And you can see the market momentum towards the downside. So you could have easily entered short position here itself, keeping your stop loss just above that candle, guys. And you're getting what I'm saying, guys. Why you have to take short position, because the day VWAP level here, in case the market would have formed some sort of support, guys, the market would have clearly broke this high with a single momentum with this kind of bullish impulsive momentums. But you can see this kind of bearish candle at the important zones, guys. This is the important zone because this is the 50 level. And you can see here the market rejected this price from these levels and continued further towards the downside. The market failed to make an higher high here. And this is the mid of the first candle as well as the VWAP level. You can see the day VWAP level and forming an important engulfing pattern over here, clearly signifying bearishness. And you could have easily entered position here also and targeted all the way to this swing low. This is another momentum where you could have captured. And this was one momentum where you could have easily captured, guys. But and if you consider this swing over here, guys, if you consider this whole swing structure over here, see the common point between this to the common point between this, you can see the market taking support here from the 0.38 level, clearly signifying some sort of bullishness already. You can see the price taking support from 0.38 level, 0.38 level, clearly showing some sort of bullishness. And this is the 50 level. This was one trade, guys, where you could have easily taken. Or in case if you might have plot the anchor gap level of this swing low, you can see here this swing low, guys. In case if the market is showing some sort of support, you can see here This same order block levels, the support zone over here is facing some sort of rejection here and forming resistance over here, failing to cross above that level. That's where you could have easily taken the trade, guys. I hope you are getting what I'm saying. The anchor gap level of this low also acting as a resistance over here. But here you can see this kind of rejection of price. Again, the price rejecting here. You can see three candles over here rejecting price from these levels, guys. Clearly signifying some sort of bullish sentiment, and you could have just hold it on to your like exited your position after seeing this kind of rejection candles. And you can see again the market came all the way again to these 50 levels, mitigated this and continued further selling towards the downside. And what you can see here is that the market clearly broke the structure low here, and you can consider this to be a chalk formation. And if you try to plot the anchor gap level of this swing high, you can see price rejecting from these levels. Let's mark it after that. And if you consider this swing high to swing low, guys, where the market showed some kind of bearish sentiment, and you can see price rejecting from 0.38 level here. This is the 0.38 level where price is kind of rejecting from these levels. And you can mark the order block level also. You can see this three candle structure, which actually broke this structure towards the downside. And if you consider this momentum also, instead of considering the whole swing momentum, you can see this fair value gap also here. The fair value gap here, where the market came and mitigated this fair value gap and continued further selling towards the downside. And you can see this kind of rejection, guys, from 0.38 level. And again, the market broke this low, clearly forming another break of structure. In case if you might have failed to take this position here, guys, after seeing this break of structure, you could have waited for another retracement. And clearly here, the market formed a clear break of structure. And if you consider the common point between this, the common point between this, and again, you can see the market rejecting price from 0.38 level over here and forming a bearish engulfing pattern. Bearish engulfing pattern, you can see clearly there is another candlestick psychology formation over here. You can see this is the zero bearish engulfing pattern, guys, where the market rejecting price from 0.38 level after this kind of bearish impulsive momentum and forming engulfing pattern over here. Clearly, you could have taken short position here also. The first position was here, guys, giving your stop loss just above that candle itself, the day VWAP level, after rejecting price from 0.38 level. And if you try to plot the fib extinction levels of this swing momentum, guys, the high of this candle to the low of this candle to the high of this candle, because since all the swing structures is black, so we would have targeted all the way to 4.26 level. You can see clearly the 0.38 level, or in case if you might have hold it on, you could have targeted it all the way to this zone, guys. But for time being, let's consider this. After this, you can see some kind of bullish engulfing pattern over here, or you could have targeted the order block level, guys. You can see this demand which I have already plotted here. So you could have clearly targeted this demand over here. This is the 0.3, this is the 3.6 level where you could have targeted. And in case if you might have entered at this swing position at this retracement, guys, so if you consider the common point between this to the common point between this to the common point between this, you could have targeted. You can see both are in confluence, guys, here, the 0.38 level as well as the 4.26 level. You can see clearly showing some kind of confluence here. I hope you are getting, guys, what I'm saying. The 4.26 level, in case if you might have entered short position here after seeing this kind of bearish candle, rejecting price from 0.38 level, and you could have targeted it all the way to this zone, and you could have targeted this swing momentum all the way to this zone, guys. So I hope you're understanding what I'm saying. This is the momentum, guys, and you can see there was a multiple. Again, the market rejected price from these levels, and after seeing this kind of breakout of this 21 moving average, and immediately followed by another bearish candle, which I've already mentioned to you in previous videos, guys. If I need to show you, let me show, guys, the bearish momentum. You can see clearly the market clearly broke this 21 moving average towards the upside, but immediately followed by another bearish engulfing or piercing patterns over here. Or you can see here, I think if you go and watch my previous videos, then you definitely will get it, guys, what I'm saying. So in case if you might have missed out on that trade, you could have, after seeing this kind of bearish engulfing pattern, you could have entered short position here also. You could have captured it all the way to this swing low. And you can see after this kind of huge bearish candle, following immediately the market showed some sort of demand here and continued and moved within the range, clearly signifying some sort of bullishness. So in case if you try to plot the anchor way up levels here and see in case if the price is forming some sort of support, here you can see clearly the market is showing some sort of support. And for that price action, you can see clearly the market formed a chalk over here. after this kind of huge bearish candle, guys, the market clearly broke this low and closed below this low. But immediately, the market, after this kind of huge bearish candle, the market moved towards the upside and even found a chalk. And if you consider the swing momentum, the low to high of this candle, you can see the market taking support from 0.38 level over here, as well as the day VWAP, the anchor VWAP level, the 0.3 level, clearly signifying some sort of bullishness. And this is one order block level here, or you can consider the swing momentum, the whole swing, which actually broke structure towards the downside. And if you look into higher time frames and see, it would be a whole swing. As you can see, there is a clear swing over here. And what you can see is to mark the order block level here. You can consider this to be a 15 minutes order block. This is a 15-minute order block, guys. So let's mark it. This is a 15-minute order block. And what you can see is the market rejecting price from 0.38 level over here, clearly signifying some sort of bullishness. And after this kind of bearish momentum, the market immediately formed a chalk over here. And this swing momentum changed the market sentiment here from being bearish to bullish, guys. So what you can, and again, the market taking support from this order block level. This is a clear 5-minute order block. And what you can do is to mark the structure over here, the order block level here, and targeting this swing low. But what you can see here is that the market took support from the anchor way up level and even broke the structure high, clearly signifying bullish sentiment itself. This is a clear break of structure. And what you can see is to mark the fib extinction levels, the common point between this to the common point between this to the common point between this. You could have targeted the 100% move here. You can see after this kind of huge bullish momentum, this is the 100% move where you could have easily targeted, or you could have targeted this order block level. This is a clear 5-minute order block, guys. And you could have tried your stop loss all the way to that zone. And you could see even fair value gap here also. This is another order block level. So you can see the market reaching all the way to this order block level as well. You can see how the market came and reached all the way to that zone. Or in case if you might have missed out, you could have targeted the midway between the 1.68 level as well as the 100% move. The common point between this to the common point. And if you mark the midway between the 100% and 1.68 level, you can see this is where you could have easily targeted. But let's consider the 100% move and rejection of price from these levels. You can see clearly the order block level where the price is rejecting, clearly signifying some sort of bearishness only. So long position here, guys, keeping your stop loss just below the anchor gap level and targeting all the way to this zone. This is another trade setup where you could have easily taken. And after this, the market has closed. You can see this is the next day, guys. This is on Sunday. And here you can see again the market consolidated above the 9 as well as the 21 moving average, clearly signifying some sort of bullishness. And again, after the price rejecting from this 15 minutes order block, the market clearly broke this low. You can see the market clearly broke this low, guys, changing the market sentiment here from being bullish to bearish. You can see the market formed a clear chalk over here and rejecting price from these levels. So let's try to take this day VWAP level out. This was yesterday's VWAP level, and let's take this also out. The same support over here, guys. You can see here it formed a support, and here it's facing resistance. So it's always you need to keep that in mind. Sometimes the same 200 moving average here is forming a support, and another 200 moving average might face may form resistance once it's been broken towards the downside. And I hope you're understanding what trades where you could have taken, guys, clearly showing some sort of bullishness. And here there is a 1 minute, 5-minute order block where it got mitigated, failed to make a higher high and broke structure towards the downside. Again, the market showed some kind of bullish sentiment, but this demand clearly broke the internal chalk formation, guys. But definitely the market was failed to break the swing high here. You can see the market even closed rejected price, came all the way to this swing high, but rejected price from these levels and found a chalk over here, which I've already mentioned to you. And if you try to plot the anchor gap level here, and you can see rejection of price from 0.38 level, the 200 moving average, as well as everything is in confluence here. You could have taken short position again at 0.38 level, which I've already mentioned to you. And this swing momentum changed the whole sentiment from being initially bearish to bullish. And in case if the market faces resistance from these levels and continue further selling towards trade downside, we should look for two supports, guys, which I've already mentioned to you. Whether price is taking support from here or rejecting price from these levels and continuing further selling towards trade downside. But you can see here the price taking support from 0.38 level as well as the day VWAP level, the anchor VWAP level, which I've already plotted and I've showed you the anchor way up level showing some sort of support and price is trading above that range itself, clearly showing some sort of demand. And you could have easily taken after this retracement and at the 0.38 level price rejecting and targeting all the way to 100% move. And now let's look into the Sunday trade analysis, guys. You can see the market hugely showed momentum towards the downside. There was only a one directional momentum. And here you can see clearly the chalk formation over here, price rejecting from a 15 minutes order block and clearly showing some sort of rejection and came all the way and formed a chalk over here. And if you consider this swing momentum over here, guys, the common point between this to the common point between this, you can see the market almost reached the 550 levels here. And market even showed some sort of rejection here and continuation of price towards the downside. This is the 550 level, guys. Let's keep that aside. But here you can see the market showing some sort of demand. Again, the market retraced, rejected price from this 21 moving average and even showed some kind of bullish sentiment and moved all the way to this zone. But what you need to see here is that the market here has some fair value gap here. You can see there is a clear fair value gap, and here also there is a fair value gap. But here you can see the market mitigated this fair value gap. And after mitigating this fair value gap, you can see clearly the market broke this structure towards the downside. In case if the market sentiment would have been bullish, nowadays the market would have took support from this there again could have continued further towards this mitigation, this fair value gap, or even market would have broken this swing high. But you can see here the market mitigated this fair value gap and clearly broke structure towards the downside, clearly signifying some sort of bearishness. And in case if you try to plot the day VWAP level here, you can see the market here taking support over here. As you can see, the day VWAP level price rejecting from 9 as well as 21 moving average. Before this candle formation, you can see it was clearly bullish, the market rejecting price from these levels and trying to move higher. You can see this kind of demand over here, but here it rejected price, and you can see the market here before this price action being formed, guys. You can see the market trading above the 9 moving average, 21 moving average, taking support from the day VWAP level, clearly signifying some bullishness. And the market sentiment after taking this kind of support, the market could have easily broken the structure towards the downside and would have continued further selling. But this swing over here changed the whole perspective from being bullish to bearish, guys. And even here also it changed the whole perspective from here from being bullish to bearish, since it rejected price from 50 minutes order block and immediately formed a chalk formation. And here also the market showing 50 levels, the fair value gap, as well as the breakout structure here. This momentum clearly signifying the market sentiment from being bullish to bearish. And if you try to plot the order block level here, you can see the market mitigated this order block. This is the 5 minute order block, guys. And again, the market clearly showed some kind of bearish sentiment. And after that, the market again retraced. And clearly, you can see after this kind of bullish engulfing candle, the market here rejected price from this level over here and continued further selling towards the downside. But in case if you might have missed out on this swing also, guys, or in case you can see the market, this is the fib levels. Let's try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this. So you could have targeted all the way to 100% move, or you could have kept it all the way to 1.68 level. You can see the market almost reached all the way to 1.68 level or the 100% move, guys. You can see this swing momentum, but here it showed some kind of bullish sentiment, or after this kind of bullish candles formation, after the price showing some kind of extended moves. You can see the price here also. This is a 5 minute order block. Clearly, market actually broke structure towards the downside here. You see clear break of structure, clear break of structure. But here the market is showing some sort of bullish sentiment. But I'll come to this later, guys. I will explain to you. But here you can see the market mitigated this order block level, and you could have easily taken short position here and kept your stop loss. Why you have to take short position, I would like to explain. But here you can see the market showing some sort of bullish sentiment, rejected price from these levels, the 9 moving average, and this momentum over here, guys. You can see one, two, three bearish candles which actually broke this low, guys. This is a clear change in market direction, guys. This momentum would never happen in case if the market sentiment would have been bullish. Till here, the market sentiment is bullish, but here this momentum changed the whole perspective. And and adding on to this momentum, guys, we should look into this swing momentum here, which actually broke this chalk, which actually broke this low, the chalk formation, initially showing some kind of bullish sentiment, but this momentum changed the whole sentiment. And price rejecting from this 50 minutes order block and the market mitigating this fair value gap. Everything showing confluence, guys. And you could have clearly targeted all the way towards the downside. But after this swing momentum over here, what you can do is to plot the high to low of this candle over here. And in case if you can see the market rejecting price from 550 levels over here, you can see clear 550 levels over here, clearly indicating some kind of bearish sentiment, guys. This is the 550 levels. And in case if you try to plot your anchor gap levels here, you can see the market here facing some sort of rejection. And After this kind of bullish candles, you can see the market clearly closing below this low. When the market broke this low, you could have easily entered another short position. You can see clearly break of structure, and you could have considered here the order block level as well. You can see the market broke this order block level above, but it failed to close, guys. Or you can consider this order block also. You can see clearly, you can consider this to be a clear order block as well. Market rejected price from these levels, closed below this range, and even broke this towards the downside, clearly signifying bearishness. And the market you could have traded and targeted all the low, all the way to this swing low. This short scalp where you could have easily taken after this candle formation, keeping your stop loss just above that candle and targeted all the way to that swing low, guys, the nearest swing. This such kind of scalps will be there would be many scalps, guys, but you can see clearly the market trading below the this range itself. And the order block over here, the order block here, guys. This both order blocks are mitigated. So the next target is to look for another liquidity only. But there is no near order block levels. So what you could see here is to mark the anchor gap level over here and see in case if the market rejecting anywhere price over here. But you can even mark this support over here and see in case if the market is showing any support for rejection of price here. And you can see this swing momentum over here, guys, which made a new low. Initially, the market rejected here, and again, the market made a new low, but immediately reversed back. But you can see this swing momentum over here clearly broke every lows over here. There was a strong support here. So clearly, market formed a clear break of structure. And if in case if you try to plot the order block level here, you can see this is a clear 5-minute order block level. And after this kind of momentum, the market rejected price from this and continued further selling towards the downside. So what you can see is that this order block level over here, and if you try to plot the VWAP level, the price rejecting from here, again the market rejecting price from these levels, clearly signifying some sort of bearishness. Or in case if you try to plot at this low as the anchor VWAP level, and see in case if this low, this anchor VWAP level facing some sort of rejection, but here you can see the market facing a multiple rejections. But you can see the clearly the market broke the structure with the fair value gap as well as imbalance candle and clearly broke the structure low. And in case if you try to plot the Fib extinction levels, guys, of this swing momentum, the nearest swing, guys, common point between this to the common point between this. So what you could have targeted is all the way to 4.26 level. And again, if you try to plot the Fib retracement levels here, so you could have easily targeted the double of this structure here. This is the 4.26 level. You can see how the market came all the way to this zone. And again, the market, this is a panic selling, guys. Definitely due to tariffs or some kind of issue, you can see clearly the market sentiment here is bearish. And if you look into a 15 minutes time frame and see in case how the market behaves, you can see price rejecting from this 21 moving average, again the price rejecting from this 21 moving average, again the price rejecting from this 21 moving average, clearly signifying bearishness, guys. I hope you're understanding what I'm saying. In a 15 minutes time frames, you can see how the market is behaving. Clearly rejection of price from that moving average. And if you try to plot the anchor wave levels, you can see in a 5-minute time frames you couldn't make out, but definitely the market is closing below the 15 minutes time frame. You can see rejection of price from 21 moving average and closing below the anchor way up level. The support over here, it's closing below. You can see even not even a single candle over here. Even after breaking the 21 moving average, price is closing below the anchor gap level, clearly signifying bearishness, guys. And in case if you try to plot another anchor gap level here, the swing low over here, you can see the price rejecting from this 21, the anchor gap level over here, and there is a few 50 levels as well as a 21 moving average and closing below that levels, clearly signifying bearishness. So a clear order block level, guys, the in a 5-minute time frames, when you try to enter your position, you could have kept your stop loss just above that candle itself, guys. So above this candle, and you could have targeted all the way to 4.26 level. This is the clear target. And in case if the market is trading here also below the 9 as well as the 20 moving average, you could have easily targeted all the way to this window. And after this kind of huge bullish candle over here, engulfing candle over here, you can see this kind of blue, and you could have exited your position somewhere here, or you could have just tried your stop loss, guys. I hope you're understanding what I'm saying. In a 15 minutes time frames, you can see price rejecting from that levels. You should always look into higher time frames, guys. And in a daily time frames, what I have told is that after rejecting of price from this 21 moving average, I told you could have the next target would be this swing low, and there is high chance that the market might mitigate this swing low. And you can see how the market actually came all the way to this low, which I've already mentioned to you in previous videos that the next target might be this swing low, guys. There is a high chance that the market might break this swing low. And in case if the market sweeps this swing low, there is a high chance the market might head higher. But in case if there was aggressive selling and closes below this swing low, you could expect new lows and market might continue further selling towards the downside. And this is about the trade analysis in Bitcoin, guys. I hope you're understanding what I'm saying. Um, in case if you find my videos helpful, guys, please like, share, and comment. And you can see here there is another order block level over here. Let's see, guys. There is a clear order block level which actually broke this low as well. So you could have considered once the market came all the way to this order block level, keeping your stop loss just above that zone. And in case if you try to plot the Fib extinction levels, the common point between the swing low to swing high to swing low. So you could have targeted the 1.68 level here. You can see clearly this is the 1.68 level where you could have easily targeted. This was another structure where you could have easily targeted in that day itself. So I hope you're understanding. It's as simple as it, guys. You should always follow a minimum risk to reward ratio and you should learn to accept your losses. The first and the foremost important thing is to learn to accept your stop loss and you should let go of your ego. There is a high possibility that always you might be wrong. So you should learn to accept your losses. And whenever you find some kind of trends, guys, and the market is trading below the 9 to 21 moving average, you should always try to hold on to your positions. And I think in case if you might have holded on to this position here, guys, you could have made a decent profit also. This is about my Bitcoin trade analysis, guys. I hope you're understanding. In case if you find my videos helpful, guys, please like, share, and comment. Share with your friends and family. And leave a comment below in case if you find my videos helpful, guys. And in case if you want to keep in touch with me, Instagram is the way to go. You can definitely message me over there. I would be glad to respond to you guys. Thank you.